Ever wish you could invest in the entire stock market with just one click? What if I told you there's a way to do it without breaking the bank or losing sleep over stock picks? Yep, it's real. It's called an ETF. And today I'm breaking it down in the simplest way possible. Ready to become a savvy investor? Let's dive in. Ever feel like the stock market is just one big confusing game where only the pros get to play? What if I told you there's a secret weapon that even beginners can use to invest like a boss? And it's easy as ordering your favorite coffee. Welcome to the world of ETFs, where you can invest in a whole basket of stocks with just one click. No need to stress over which stock to pick. In this video, we are unpacking everything you need to know about ETFs, exchange traded funds for the fancy folks. Don't worry though, we are breaking it down in plain English with all the juicy details and none of the boring jargon. So, if you're ready to learn how to diversify your portfolio, lower your risk, and invest smarter, not harder, then stick around. By the end of this video, you'll be throwing around the term ETF like a Wall Street pro. Alright, let's get down to business. What exactly is an ETF? Think of an ETF as a big basket filled with different types of investments, like stocks, bonds, or even commodities. When you buy a share of an ETF, you're basically buying a tiny slice of the entire basket. So instead of putting all your eggs in one basket, like buying a single stock, you're spreading your risk across a whole bunch of different investments. Cool, right? It's like ordering a sampler platter at your favorite restaurant. You get a taste of everything without committing to just one dish. Now you might be thinking, okay, sounds interesting, but why should I care about ETFs? Well, let me tell you why. First up, diversification. By investing in an ETF, you're spreading your money across multiple assets. This means you're not putting all your money on one horse. So if one stock in the ETF goes down, one might go up, balancing things out. It's like having a financial safety net. Next, let's talk money. ETFs are usually cheaper than mutual funds because they're passively managed. No fancy pants fund manager taking a big cut of your returns. This means more money stays in your pocket, and who doesn't love that? Lastly, ETFs are super easy to buy and sell. Just like stocks, you can trade them on the stock exchange whenever the market is open. So if you want to buy an ETF on your lunch break, go for it. No need to wait for the end of the day like you would with mutual funds. Okay, now that you're sold on ETFs, let's talk about different flavors. Yep, just like ice cream, ETFs comes in different types. First, stock ETFs. They're the most common type and are made of, you guessed it, stocks. You can get ETFs that track the entire stock market, specific industries like tech or healthcare, or even just large cap companies. It's like a greatest hits album of the stock market. Next, we have bond ETFs. They are made up of bonds, which are like IOUs for governments or companies. Bond ETFs are generally less risky than stock ETFs and provide steady, if not super exciting returns. Perfect if you're looking for something a bit more conservative. Then there's commodity ETFs, which lets you invest in things like gold, oil, or even agriculture. If you're into tangible assets or just want to hedge against inflation, these might be up your alley. And finally, sector and thematic ETFs. These focus on specific sectors like technology or energy, or themes like clean energy or gaming. If you have a strong belief in a particular energy or trend, these ETFs lets you put your money where your mouth is. All right, so you're ready to invest in ETFs. But how do you actually do it? It's super simple. First, you'll need a brokerage account. This is like your gateway to the stock market. There are tons of options out there, from big names like Zerodha, Upstocks, and Grow to smaller, more niche platforms. Next, do your homework. Not all ETFs are created equal, so look for one that fits your goals. Are you looking for growth, income, a bit of both? Check out the ETF's holdings, past performance, and fees before you pull the trigger. Finally, hit that buy button and relax. Remember, ETFs are designed to be long term investments, so resist the urge to constantly check your profile. Trust in the process and let your money grow over time. And there you have it, ETFs in a nutshell. They are flexible, Low cost and perfect for beginners looking to dip their toes in the world of investing. If you found this guide helpful, make sure to give it a thumbs up and don't forget to subscribe. Got questions about ETFs? Drop them in the comments below, and I'll be happy to help. Until next time, keep hustling, keep saving, and remember the best time to start investing was yesterday. The second best time is now.